Today is Monday, December 11th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Steve, we have a USDA report this week. What will they say?
Well, usually in December they say nothing. They kind of wait 30 days until they have a stocks report, the final crop numbers this year, and a little bit more weather information. It'll be interesting because I think that they could raise the Brazil soybean crop, they could lower the Brazil corn crop, they could raise demand for both corn and beans in China. They could raise world wheat stocks. So it could be a little fireworks, but normally it's not.
Can you report on the current fund positions in the grain markets and whether or not you think they'll change?
The funds really are focused on being long beans and short corn and wheat. It doesn't seem like they want to change that position. We've got chances of rains in Argentina in the 2-week time frame, so that could actually force them out of their long bean positions. But it doesn't seem like anything is going to get them out of their short corn and wheat positions.
There's been some talk of a La Nina weather pattern. How will this impact U.S. winter and spring weather?
Well, we're always seeing this year that we've had up here in the northern third of the country snow and colder temperatures, and so that is very typical of La Nina. We're also seeing dry conditions across the Midwest and the Southern Plains and dry conditions into the Southeast. So all of that should continue this winter and possibly into the spring.
You mentioned South America. Any concerns in Brazil or Argentina regarding weather?
Argentina and southern Brazil is dry, and it's like the middle of May for them. So it's still too early to get concerned about it. But what's interesting is that when you look at the maps, the 6 to 10 day map always puts rain in the forecast, but it's always delayed. So we thought that this weekend would be a real critical weekend for Argentina. They didn't get any rain, but still the market's focused more on the 2-week forecast than the actual current conditions.
Alan, yesterday afternoon the CBOE started trading Bitcoin futures, and this coming Sunday, the 18th, the CME Group will launch its Bitcoin contract. Right. What can you say about this market?
Well, this is a market that I think should be approached extremely cautiously. In fact, the best thing to do right now is to sit back and watch how this market develops. There are some analysts that are extremely bullish on the market. There are some that are extremely bearish on the market. One thing is clear, though, there is basically no one that is looking for just a neutral sideways trade. So once again, I would stand aside, wait and see what develops. This is a very volatile market, and when we do want to start trading again, or start trading this market, I would trade in very small quantities.
Yeah, I would say that by looking at how the exchanges or how the FCMs, have margin this contract, the highest percentage of margins I think that I've ever seen, with a new product launch. I mean, that indicates, that the FCMs out there also feel that this is a very risky trade.
Absolutely, I totally agree with that assessment.
And last Friday, the employment data report showed non-farm payrolls increased by 228,000, which was above the estimate of 195,000. Does this report speed up the time frame for Fed interest rate hikes?
Actually, I don't think so. It seems very likely that the Fed will raise at the meeting on Wednesday by 25 basis points. That seems to be over a 99% probability. Of course, nothing is 100%. But as far as speeding up the time frame, I don't think that will be the case. I'm still looking for 2 more rate increases next year, while the consensus view appears to be for about 3 more rate increases.
Let's talk about the stock market. On Friday, the index is advanced due to reports that there's an infrastructure spending bill on the horizon, and Congress passed a 2-week stopgap spending bill. What does it do for the stocks?
Well, once again, it's the interest rates that still dominate, so the political developments from time to time will support the market or in some instances put some pressure on it, but the overall dominant influence remains the interest rate situation, which is at this point still very supportive to the indices. So I believe that any breaks should be used as buying opportunities, and I continue to believe higher prices are in store for the rest of this year and well into 2018.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.